welcome to TEPSA Explainers. My name is Michele Chang, and I'm a professor at the College of Europe. In today's video, I'm going to talk about the future of economic and monetary union. There's one main point that I'd like you to take away with after the video, and that is, although there is widespread agreement that the euro area requires additional reforms, there are strong differences on the sequencing of those reforms, specifically if they should be targeted towards risk reduction or towards risk sharing. Now, to go and set the context for the current debate, it's important to understand that before the crisis, economic and monetary union was characterized by a single currency, the European Central Bank, but most of the policies were still done at the national level and simply coordinated at the European level. With the crisis, we saw the establishment of banking union, of the European Stability Mechanism for bailouts, and we also saw the EU lead to tighter fiscal rules. Now, some of the major issues under discussion that will be debated in the December European Council meeting include the creation of a budget for the euro area, turning the European Stability Mechanism into a European Monetary Fund, as well as completing banking union. The completion of banking union can entail several things, including a reduction in non-performing loans in European banks, as well as the creation of a European-level deposit insurance mechanism. The main controversy in euro area reform has to do with whether reforms should first be targeted towards risk reduction or risk sharing. By risk reduction, we mean following the current rules that exist and minimizing any shared losses between the member states. And only then would you be able to go forward with what we know as risk sharing. And risk sharing entails greater solidarity between the member states, but also the possibility of losses if things go south. So in terms of risk reduction, some of the examples that are on the table include the reduction of non-performing loans in European banks, as well as tightening the fiscal rules, or at the very least applying them more today. As far as risk sharing goes, the major proposals include a common deposit insurance for Europe, as well as the development of a euro area budget. Now, the northern countries have been favoring a path towards more risk reduction, following the rules that already exist, having the member states get their fiscal house in order, and reducing non-performing loans in banks. Whereas the southern European states have been advocating more risk sharing, such as the creation of a common deposit insurance scheme in Europe, as well as a euro area budget. Everyone can agree that the euro area does need strengthening, but there are strong differences on what that means, especially on the sequencing. Therefore, I would predict a rather modest outcome from the upcoming European Council meeting in December. Thanks for watching, and stay tuned for the next TEPSA Explainer.